Okay, good afternoon, LinkedIn. Good afternoon, everybody. Happy Friday. And you know what? I'm so pleased that I've got Andy Iam because I tell you what, Andy, whenever your content comes up on LinkedIn, you make me smile just by there's something about the
Pleased to
editing
hear that.
you bring for real. So, everybody, hope you've had a good week. If you're watching it on the replay, thank you for joining us. I've got the amazing Andy Iam with me, as it says from Angel Investing School. Andy, how's your week been, man?
My week's been really busy, but really
Yeah.
good. I feel like I had a lot of energy coming into this week. I had team members return from holiday, had
Yeah.
new opportunities and new conversations that it just built optimism into the future. And like I said
Yeah.
before the recording, it feels like
Yeah.
my new year has started this month.
Yeah, which is really interesting, it's something about your new year. And I don't know whether you follow 12-week year or anything like that, any of those sorts of principles.
No, I've heard of it though.
Yeah, but some people it's a great book, 12-week year, where you break the year down into almost like 12-week slots, where you plan your goals and everything. So I'm joined today by the amazing Andy Iam, MBE. Mm.
Thank you.
Um, from the Angel Investing School and all sorts. And obviously, you can check out Andy's bio on LinkedIn. But we met, was it last year or the year before?
I feel like
Virtually,
it was the year before
the
actually.
year before, virtually. We were doing
Yeah,
like a fireside chat for some entrepreneurs or
yeah.
wintrepreneurs or whatever we want to call them. And we just there was a mutual energy exchange. I think is maybe how I'd describe it. I think you
Absolutely.
know, it was a great
Yeah, you'd
opportunity.
say some points, I'll riff off your points, I'll be agreeing, and vice versa. So
Yeah,
yeah, we just knew that we got on, isn't it?
yeah. And so I've been chasing Andy around for a while, trying to get him on here, and we finally made it happen. So, and this topic, venture capital. Does venture capital have a diversity problem? I was trying to, I guess, be a little bit provocative, but let's just start
Mm,
off with a few stats, a few facts and figures about the diversity and or lack of
absolutely.
diversity in um, in the field of, I guess, venture capital specifically. If we start there,
Yeah,
what are some of the
absolutely.
what's some of the headline stats? I know you know the stats off the top of your head, Andy, and some of
Absolutely.
those are in this post. But what are some of the stats for you, Andy, that you always kind of think, that's a reality check right there?
Yeah, I think first of all, just to explain what venture capitalism is
Sure.
venture capitalists, also known as VCs, are financial institutions and they're money managers. So they raise money from other investors, typically
Mm.
really big pension funds or family offices or sovereign wealth funds. And their responsibility is to try and make a 3x return on that money or more. So if I
Right.
raise 100 million, I need to try and make 300 million or more back for those investors in the next 5 to 7 years.
Okay.
So, in
Wow.
order to do that, they need to invest in businesses that have the potential to grow into billion-dollar outcomes.
Right. I
So,
didn't.
obviously, those businesses are very rare. It's not
Yeah, I didn't
easy to
realize
find a business that, yeah.
that's
And the
3x. I've
reason
never heard of that.
3x or more in order to be like top
Wow.
quartile, yeah.
Yeah.
And in order to find that type of business, they're
Yeah.
placing bets by investing into a number of different businesses.
Yeah.
Because when they invest in a business, they are a minority shareholder. They own maybe 5% of that
Hmm.
business. They don't own 100%. So that's why they need those businesses to grow to maybe 3 billion in value, 4 billion in value or more in
Yeah.
order to return that 300 million to
Yeah.
their investors. And
Yeah.
only a small number of businesses every year
Yeah.
even make it to that level.
Yeah.
So
Yeah.
that's the business that they're in.
Okay.
When we look at the portfolio of these VCs,
Hmm.
we would say there's something called a power law distribution. And what
Okay.
this means, put simply, is that 95% of the businesses that we invest in will fail to make us the return that we need, that 3x
Right.
return.
Yeah.
So less than 5% of the businesses are going to drive all of the returns because they're going to grow so big. An
Right.
example of that was if in 2004 I invested into Facebook, Facebook
Yeah.
grew so enormous that that would have been able to return my fund. That's the
Yeah.
phrase when we talk about the 3x or
Right.
more.
Okay.
They okay. So when we look at that failure ratio in terms of 95% not even being able to return the fund,
Yeah.
it seems very unfair the fact that VCs, 1p in every pound goes to all female teams. And less than
Right.
0.02%, so let's say that's a rounding error, 0% goes to
Mm.
black females.
Yeah.
This means that it's a very homogenous group. And a lot of this capital that they're allocating is to a lot of middle class white men like themselves.
Yeah.
So the problem now is that because I have these people in my network, maybe I'm ex McKinsey or I'm ex Oxbridge or ex Cambridge, I'm
Yeah.
investing in people that I know or people
Yeah.
within my network or people a short distance away from me who are likely to be like me.
Yeah.
So all of the capital is being allocated by a small number of people into a small number of people. And
Yeah.
there lies the problem.
Yeah. Yeah. It's I mean, the way that you explained it, I don't think I've ever heard anybody explain the world of venture capital in that way, about the returns and the failure rate and the importance of finding that, I guess, almost like that, the unicorns, the importance of
Yeah.
finding those one or two businesses that are gonna be sort of like astronomical. Let's just talk about, so this, the homogenous group. So if we say there's a lot of homogeneity in venture capital within the firms, why is it like that? And has it always been that way? And what are your views about the homogenous nature of those firms and the part that it plays in the issue?
Yeah. So if we look at the history of like venture capitalism and
Mm,
angel investing, we can go all the way back to Mr. JP Morgan, not the firm, the individual.
okay.
And he invested in Thomas Edison, the inventor of General Electric and the light bulb. But only a small number of private investors who had access could invest into Edison at the time.
Yeah.
That's where we began,
Yeah.
right? So from then till now, what we've seen is these small number of networks who have private access to
Yeah.
these deals are investing into these deals.
Right.
And that's just compounded over time to where we are today.
Yeah. Yeah.
And the challenge is, how do we change the people that are making the decisions on who allocates capital?
Yeah.
So there's two ways that I see we can solve the problem.
Hmm.
One is the investors that invest into VC funds, we call them
Hmm.
limited partners. How can we influence them so that they can influence what shareholder value means for them?
Yeah.
Because they have voting rights. If I'm investing 50 million into your 200 million fund, you're going to listen to what I have to say,
Right.
right? So if diversity matters to them, it will matter to the fund.
Right.
The second way we can change it is usually the first round of funding that a startup
Mhm.
gets is from family, friends, and fools, we call it FFF. But really, we call them angel investors. So
Right.
if the angel investors are diverse,
Yeah.
then that means that diverse angels are investing into who? Diverse founders.
Okay.
It gives founders the opportunity to again get the traction and the performance they need to be able to go and raise from a VC in the later round.
Yeah.
If I can't raise that earlier round, a lot of diverse founders struggle to get to that VC round. So those
Okay.
are the two ways I believe that we could solve that problem.
Okay. It's really interesting. I mean, first of all, just shout out on the explanation. I can't see who this user is, but that was the best explanation of this subject I've ever heard. Well, that's why he runs the Angel Investing School. Right? We just got schooled.
Oh,
Thank
my
you for your
pleasure.
explanation, Andy, from Cloma as well. Thank you for listening in, guys. So interesting. So you've suggested almost like these two ways at which we can go at it first in terms of, and it's interesting because you've gone first to, and so I guess my question almost is whether you think this is the strongest and or the quickest route is to have investors who are diverse, because that then puts pressure on the VCs, the individuals that are doing almost like the matching or the day job stuff in the middle.
Yes,
Um,
I think we need diversity across the,
yeah,
the
yeah,
whole life cycle. Like
but
we need
just the
diverse
ones
angels,
diverse.
we need
Yeah,
diverse VC investors, we
yeah,
need diverse limited partners that invest
yeah.
into VC.
Which one, if you had to choose of them, in terms of which order you would go in, which one would you say is the most important of those? Which ones should we be?
That's a really difficult question. I think that the limited partners is very important because
Okay.
if I worked at a family office, and a
Yeah.
family office is an organization that's been set up by a wealthy family to make
Yeah.
investments on their behalf. So
Yeah.
the likes of Will Smith will have a family office, not called Will
Okay.
Smith, it will be under a different name, but
Yeah.
Oprah has a family office, right?
Okay.
It's making investments on her behalf across a number of assets.
Yeah.
Now that family office is both um, a lot of the time investing into a VC fund, but also directly investing into entrepreneurs as well.
Right.
So they have the power to do both. They
Hmm.
can be both the angel investor and
Yeah.
can be both the investor into the VC. So that's why they have so much influence
Yeah.
in changing the way that we allocate capital.
Yeah.
The other thing that makes a big difference is if you can't see it, you can't be it sometimes. We need
Yeah.
to hail up and shine a light on a lot of the diverse entrepreneurs who are scaling businesses,
Yeah.
right? Because then others will see that and believe that they're missing out on great opportunities, and we
Yeah.
need to back and find more people like them too.
100%. I think especially, I don't know whether you would agree with this, but I think especially in the UK, and sometimes I think sometimes those entrepreneurs who are from diverse backgrounds, sometimes they're quite low key, so people don't know who they are,
Sometimes just getting on with the work. Yeah,
yeah, they're just getting on with exactly, especially if they're scaling businesses and and actually all we see are almost like the typical businesses that are sometimes associated with people from certain cultures or certain backgrounds. I remember actually on LinkedIn Live on here I had Elaine Hughes, who specializes in entrepreneurs with disability around luxury
mm,
for disabled consumers, which is a huge market, which we would never
mm,
think of. And sometimes it's actually the individuals that are growing businesses in that space are just low key out
yeah,
there doing their things behind the scenes, and
getting on
people,
with the work.
you know what I mean?
Yeah,
Yeah, yeah,
absolutely. And I think to echo what you just shared, like VC is not for everyone. It's been over glamorized by the media outlets, but the truth is the majority of businesses would not require VC funding and do not suit that funding model. Because as soon
okay,
as you take on that funding, you take on a growth strategy. You need to
right,
grow aggressively in a short space of time, and it can ruin your whole plan.
okay,
So I always try and encourage founders just to become profitable and sustainable, step one,
yeah,
and that opens up optionality, whether you go to angel investors or grant funding or equity crowdfunding or debts and loans from banks. The
yeah,
world becomes your oyster because you're profitable and you have something sustainable. So
okay,
I think that's the first focus of an entrepreneur, to just get to that level. Some
yeah.
people call it product market fit. I just think profitable and sustainable.
Profitable and sustainable. I'm going to take that away. I'm going to take that away. And then I want to come on to, you said about friends, family, and fools, right? The three Fs, who often, and is it fair to say that those are often, I know you were talking about investing in and sort of backing those businesses. Is it fair to say that those are often the first sort of consumers and clients as well, potentially? What are your thoughts on that?
Uh, Typically, not necessarily actually,
Okay.
because when you're getting started and you have an initial product, you're getting it to market. You can
Yeah.
imagine let's say it's like a beverage business, and I make
Yeah.
drinks, and I've
Yeah.
got a contract with Sainsbury's, really excited, but I can't afford the production run. So then
Yeah.
Sainsbury's are not going to invest in me at this stage. It's way too early, even if they
Yeah.
wanted to. But if I turn to the bank of mum and dad, I might get some money. If I
Yeah.
turn to my ex friends at university, I might get some money. If I
Yeah.
turn to my ex employer and colleagues, I might get some money.
Mm.
And that is enough maybe to do my first couple runs with Sainsbury's, so I can start getting some cash in the bank to do more
Yeah.
work.
Yeah.
So that's typically how it goes. I think the risk sometimes is that a lot of people may be investing out of love for you, and
Mm.
therefore maybe what we class as amateur investors. They haven't
Mm.
gone through the angel investing school. They're not aware of the risks
Yeah.
of investing. So
Yeah.
when an outcome may be unfavorable in 5 years, they may
Mm.
think like, "Where's my money gone? Aren't you going to pay me dividends? How are you going
Mm.
to pay me back?" And it's because actually they didn't understand the risk of investing into startups.
Yeah. Yeah.
You don't want to burn bridges because these are personal relationships that you
Yeah.
have.
Yeah. And the friends, family, and fools as well. They've
Oh,
got
you
to
really like the
they've
FFF,
got to
don't
find a
you?
nice word for that third F.
Yeah, 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 yeah.
But given that, particularly, when we think about wealth distribution, say for example in the UK in particular, say we think about the wealth distribution, is it fair to say that that group generally is going to be less diverse as a generalization across the UK? Friends, family, and fools. If we're looking for diversity,
If you're
we
looking
said
for the wealthy, yeah,
the wealthy.
yeah.
Yeah, yeah, yeah,
The wealth distribution in Britain's is scary,
yeah,
actually, the gap.
yeah,
I think I read something about, I think the top 60 wealthiest families in the UK represent the wealth of 33.5 million people. And when we look at one of the things that the UK sadly is notorious for now is money
mm,
laundering. So a lot of
mm,
Russian oligarchs, a lot of people from other nations can set up a company in the UK, put Mickey Mouse as a director. Company's house doesn't check, and they're able
wow,
to then acquire properties in Chelsea and Kensington under these properties, right? So people don't really understand sometimes how like the economy works and how wealth
yeah,
works. And when we look at the biggest driver of wealth in our lifetime,
Yeah.
if we take away inherited wealth that I've got from a previous generation,
Yeah.
a lot of that wealth has come from entrepreneurs driving the value up in their businesses. And
Yeah.
that's why you'll notice that when you look at entrepreneurs like Elon Musk at Twitter, or Peter Thiel, who's the founder of PayPal,
Yeah.
or the founders of Google, or Mark Zuckerberg, the founder of Meta,
Yeah.
all of them invest into other businesses because
Yeah.
they recognize that their business created a lot of wealth for them. And if they invest in other businesses, it's going to drive up their wealth as well.
Right.
Businesses can accumulate at a rate that no other asset class can because it's
Yeah.
limitless, that top side. Property, I can only sell it for market value.
Yeah.
I can only rent it at a certain market value.
Yeah.
But with businesses, I can grow my business to 10 million in value and get acquired for 30 million, and it's
Yeah.
life-changing amount of money. And there's no other asset class that can
No.
appreciate in that way. So it's the biggest creator of wealth in this
Yeah.
country. And that's why I'm trying to educate people at an early stage. You've got to get ownership stakes into
Yeah.
businesses
Yeah.
because that's what's going to drive your
Yeah.
wealth and your pension
Yeah.
plan.
Can you see literally the penny dropping like in my face? I'm like, because I've never really I know about returns and stuff, but I guess when I think about investing in terms of, even when I think about investing in businesses, I think more the stock market, right? I'm not really
Mm,
thinking into,
that's publicly
yeah,
listed businesses. We should
yeah,
explain that. So we've
yeah,
got a stock market, okay,
yeah,
the FTSE 100 in this country. In America, you've got the S&P 500
mhm,
and Nasdaq. And these stock markets are basically companies that are publicly listed, publicly available for people to buy stocks and shares,
yeah,
okay, shares into that company. What we miss out is that all of these companies started as a startup and drove tremendous value before they got
yeah,
sold to the public.
yeah,
So people that are angel investing and VC investing are getting a lot of value from those businesses when they were private before they got listed in the public.
right, yes,
So Google made people like Uber in 2009. If you invested as an angel investor,
mhm,
in 2019, your $5,000 would have been worth 25 million.
okay,
What
yeah,
else? No stocks and shares
yeah,
gives you that.
yeah,
Like you have to go into a lucky small cap to get that. The
yeah,
average when you go into an ETF in stocks and shares is about 7 to 10% a year.
yeah,
What I'm talking about here is wealth creation in the private market. Companies that are privately owned. Okay,
okay,
that's where a lot of the value is created when they're
yeah,
privately owned. So
yeah,
if you imagine Google stayed private for 5 more years, that would have driven even more value for
yeah.
the angel investors into those early businesses. So the
What?
question that becomes, how do you gain access to great
Yeah,
startups that are privately owned? And
yeah.
that's what we teach, obviously, at the Angel Investing School.
And what's so fascinating, and obviously, and I'm always feeling as though now I have to give a disclaimer that we're not giving out financial advice. But what's so
We're not.
interesting, and Jason, really nice to see. Jason is saying what sectors of businesses are most appealing to investors, and somebody else
I'll
has said,
answer that after.
Andy is dropping some knowledge to that, and literally that is my head. My head is like. But
Good.
you know what? Do you know how this links back in? And feel free, if you do or don't want to. And in fact, let's just pick up on Jason's question as a general point. What sector of businesses are most appealing to investors? And if you were saying like the angel,
Yeah.
does it just depend on different angels, in your experience?
So largely what we see in Europe, and I need to take a step back and talk a bit about global culture. Okay.
Mm,
Let's start with America. America is the chief architect of marketing. They created globalization. So when a brand was created in America, Nike, Beyonce in entertainment, sports, it gets globalized. They are experts at that. They've been experts of that for over 50 years. You notice that with a lot of the brands that we use today, like
mm,
even the food that we eat, right? McDonald's, export from America, how
mm,
many things around us. So a lot of the CEOs in America came from a very commercial background. They're like MD of sales before they became CEOs. Then when they've grown their startups and exited and made money, they've created VC funds and became angel investors and invested back into entrepreneurs and advised them. So
yeah,
if we look at someone like Mark Andreessen, he created Netscape, an early internet
yeah,
browser, and he exited his business and started a VC fund called Andreessen Horowitz. If we look at Peter Thiel, he started PayPal, right? That
mhm,
payment service that exists today. He
mhm,
exited his business and started his VC fund, right? So this is
right,
a pattern in America that they're reinvested back into their entrepreneurs.
yeah,
They exit this. In Britain, it was very different. And in the UK, we had ex investment bankers starting VC funds. So their mental models was, I'm used to taking calculated risk on an Excel spreadsheet. So I don't like taking too much risk. Therefore, I'm going to invest into predictable businesses, which typically are B2B tech businesses that sell from business to business. So that's where a lot of investors in Europe focus their investment attention. But I want to share the context of the culture and how it
Yeah.
shapes their mental model for how they invest. So if you're
Yeah.
starting a consumer goods startup or a fashion brand, very
Yeah.
difficult to raise for in the UK. And you notice it because when you look at the biggest consumer startups, and consumer means that, like, as a consumer, I can use it directly, like Google in
Yeah.
Google search, or Meta in Facebook, or
Yeah.
Snapchat. Like,
Yeah.
all of that was created in America.
Yeah.
The only like really massive consumer tech that we can say is from Europe is Spotify, right? But typically, it's B2B startups in Europe that a lot of the VCs concentrate their investment into. It's not to say that you can't raise from other sectors, but if you look at the majority of where the money's going, it's into B2B tech.
That is fascinating. And actually, and it comes back to, and Jason's put a follow on point, I asked because marginalized communities may not enter these sectors. And when you think about the lack of diversity in tech, you combine that with the lack of diversity in, say, in VCs offices and the investments, you just got lack of diversity generally, right? It's tech
Absolutely.
bros,
Yeah.
pitching to people that have typically invested in tech bro
Yeah.
companies. You know what I mean? It's almost like a
Yeah. Yeah. Absolutely.
wow.
And part of the challenge here is that, let's talk about two parallel lives.
Yeah.
Yeah. I grew up in Tottenham. I was playing football with my local community. My dad was a cab driver. My mum was a nursery nurse.
Mhm.
I didn't know about the tech world. I finished
Mm,
university. I got a job as a management consultant at Ernst and Young. I started a
mm,
business called Mixtape Madness in my evening and weekends with my brothers.
right.
So it wasn't until I was about 25, 26, 27 that I really started understanding about tech and venture.
Mhm.
Let's look at someone like Bill Gates. He went to computer coding camp at 8 years old. He was coding very well at 10, 11, and 12.
Mm,
His parent, like even Jeff Bezos, his parents were lawyers and initial investors into his business. So the
mm,
advantage that they have in understanding technology and how to write code and how to build, by the time that they're 26 and 27, there's a massive gap in competency and
mm.
capabilities in tech. So what I'm seeing with a lot of black founders is there's not, like, a lot of them haven't worked with engineers and developers, haven't
Yeah,
learned how to code. So when it comes to the time where they want to start a tech startup, they're at a disadvantage. Because how do I hire technical talent when I can't assess them, when I don't know the quality of their code, when I don't know what good and bad looks like, right? It becomes very difficult. And that's where the gap starts to emerge in terms of, like, if you want to solve problems for your community, you also need to think about your capability. So
yeah,
so if I look at the angel investing school, I'm not building a tech startup. I'm building a service-based business because I know that
yeah,
in my sphere of influence and my competencies,
yeah,
I can do this.
yeah,
And some of us have to ask that question about ourselves. What can we do given who we are and our network and our capabilities?
yeah. My my mind is literally blown. I just love conversations with you, Andy. Like I seriously do.
I
It's
appreciate it.
great. Do you know what? If I'd known Jason was going to be around, I might have tried to pull him on. Do you know Jason? Do you two know each other?
Do you know, I'm looking at his picture. I'm not sure I
You
recognize
need to,
Jason.
right? This is because I love making connections of people. You two, 100% need to connect.
Okay.
Um,
Jason, we'll follow up after this.
yeah, yeah. I tell you what's really, honestly, Pat, it's going to be powerful. Somebody else is just high fiving you. I don't know who the name is because I can't see this.
Excellent.
Love
Excellent.
this, my
Excellent.
brother.
And by the way, this is why, outside the Angel Investor School, I've got a club called the 678 Club, and it's
Okay,
black founders that make 6, 7, and 8 figures in revenue. I've been
okay,
very specific on who I want to focus on supporting to scale
yeah,
their businesses.
okay,
And in July, we had a really fascinating event called Planning for an Exit, where we interviewed an entrepreneur who had sold their business, a black entrepreneur, Tim Armin, and we interviewed him all about how did he prepare for an exit, what was the process you go through when you're exiting a business, and what has life been like after that exit.
mm,
That kind of discussion, where are you going to get that? You don't get
yeah,
that from uncle to auntie and uncle, or from the party, or from the
yeah,
club, or from uni. It's only if you're in the networks. And what
yeah,
I'm trying to do is try to give access to my network and to my knowledge in a scalable way. I'm trying to scale
yeah,
myself. That's why I do
mm,
these things.
yeah.
That's why I do my newsletter. That's why I've got my private Telegram group. Like, I do these things to try and scale myself to give people access.
I love it. And just honestly, it's incredible because I think when I bring it back to this question, almost like it's complex, isn't it? It's not a straight. It is, there's something
It is
about
complex.
going back to the top of the to the top of the conversation around the lack of diversity in the investors in the VC firms. But when you explain the thing about the different consumer brands and marketing and tech in the UK and all of that, and Jason's question. So Jason's business is tech, by the way, tech and more, right?
Mm,
Just to explain it, Collider, in terms of what Jason does, YouTube channel. But there is something about the more people from marginalized and underrepresented groups understand what it is that VCs are looking for or investors are looking for, ignore VCs,
yes.
understand whether or not their business is suitable for it, understand
Yes.
whether or not their skills are a good match for it. All of
Spot on.
that's really it's really important, isn't it? It's not as
Yeah.
straightforward as almost individuals sitting back and saying, "Oh, VCs don't invest in us." That is true partly, but it is actually quite complex in terms of how you crack it.
Yeah.
And,
And the
and
truth is,
yeah,
if you're a purist and you're in love with solving a problem, you'll realize that many streams lead to the ocean. There's more than one way
yeah,
to solve a problem.
yeah,
So with the Angel Investing School, I could have developed code and AI and democratized access through technology.
yeah,
But I did cohort-based courses because that's my wheelhouse and I can control that and I can influence that and I need
mm,
minimal support in order to execute on my idea.
yeah,
I think all of us sometimes need to take a step back and understand there's numerous paths to solve this problem. Which path makes the
yeah.
most sense for who I am and where I am right
Mhm.
now?
Yeah, 100%. Honestly, Andy, I could listen to you all day, but I'm conscious that we'll we'll soon kind of run. Oh, that's it. Andy, have you got a YouTube channel?
I
You have,
do actually, I do,
yeah,
and I need to deploy more
and
videos onto it. To be
you
fair,
do, and
It's
you're
Angel Investing School's YouTube channel. Yeah,
and you're also on TikTok now because we were talking about that off
also on
air,
TikTok now.
and
Yeah,
on Instagram. Tell us about why I mean, if it isn't obvious already, tell us about why you started Angel Investing School and what's next.
yeah, great question. So, I started the Angel Investing School because in 2015 I had a consulting project, which meant I was based out in San Francisco for just under a year. And that project enabled me to network with a lot of the leading world VCs there, Andreessen
Mhm,
Horowitz, Sequoia Capital, Lightspeed Ventures, Greylock Partners. For context, these are the companies that invested into Google,
mm,
YouTube, eBay, Snapchat.
mm.
They're companies that made up our desktop and our smartphones, right? When we look at our apps.
Clubhouse as well, just throwing Clubhouse in there. Yeah.
Yeah. And podcasts, yeah. Soon I've got podcasts on my website actually. If you go to
Think so.
andayim.com/podcast, you'll see all my podcast features. But
Wow.
when I was at the feet of these VC investors, it felt like a fast track MBA. I was a sponge and I was asking all the stupid questions. And I quickly realized two things. One was the lack of black partners and diverse partners at these firms.
Yeah.
And secondly, that how that corresponded to who they invested in.
Mhm.
So I saw myself almost like a translator. How do I speak to my friends in my ends about what I'm experiencing? And that's what started it off, blogging, speaking at events. And then slowly I got headhunted for a VC firm called Backstage Capital. We
Right.
raised about 2.5 million. We started accelerator programs in US, in Detroit, Philadelphia, LA, and in London.
Mhm.
And two things about that experience that's really important. The first
Mhm.
is it came from me interviewing the founder, then inviting her over to the UK to learn more about our ecosystem. It didn't
Mhm.
come from a CV and applying for a job. It came
Right.
from feeding my curiosity. The
Yeah.
second thing that was really important in that experience is that I'd never built an accelerator before. It's the first time I did that. And the
Mhm.
reason I emphasize that is because many of us try and tie ourselves to our job titles rather than our lived experience. But there's many people that I've hired and worked with who've done great things when doing it for the first time.
Yeah.
So it's really important to acknowledge that even about yourself and your skill
Yeah.
set.
Yeah.
So I've gone through that experience, and that's where it made me really it became really apparent that a lot of diverse founders who are starting these businesses, even in tech, are really struggling with closing their funding rounds, and that's what led me to start the Angel Investing School. And now over the last 2.5 years, our investors have invested over 7 million into over 300 companies.
Mm.
We trained up 100 Black Googlers over the last 2 years. They
Yeah.
started a group called the Black Angel Group. They alone have invested $5 million into over
Wow.
30 companies. So we love the activation that's occurred
Yeah.
from the work that we're doing, and corporates have sponsored our cohorts to get more and more people to gain access to the learning and make it as accessible as possible, and that's our goal.
Fantastic. Honestly, I'm conscious of time, and we have got a bit of a hard
People are giving me ideas. Yeah, you should do this. To be honest, in my membership, there are lessons and courses and masterclasses on venture capital, so people can check that out on angelinvestorschool.com as well.
Because I wish I could see who this was in terms of the name, but sometimes the feed, through the way we see it, doesn't.
Yeah, Cheryl's the queen of these LinkedIn lives, to be honest. I'm grateful that she put me on.
Honestly, more people, maybe I'll do a LinkedIn live about doing LinkedIn lives. More people should do it.
Yeah, that would be awesome. I'll definitely attend that.
And then somebody says you should set up a paid online course on venture capital.
I've got it in my membership. Join the membership, you get access to that kind of stuff.
Yeah, so you've got to get into Andy's ecosystem, man. If it's honestly, like, Andy, I'm not kidding you when I say this has blown my mind, like this half hour. But really lovely as well to understand about, when you talked about almost like learning at the feet of these, these VCs that really have been, I guess at the start of companies that have literally changed the face of the world, really.
Absolutely. Absolutely. I still feel like that now, by the way. I'm still a student. I'm still in that mode of continuously learning. The teacher's both the student and the teacher, isn't it? So you're always learning.
Yeah, well, what did they say? We teach that which we need to learn ourselves, or something.
Absolutely.
Somebody said, where is the link? The link, is it in your bio? The link's in your bio, right?
You can grab it. If you follow me on LinkedIn, you'll be able to get everything there. Angelinvestorschool.com, but you can get it. I don't think I can post stuff here.
So I don't know. I think we answered the question that we'd set in terms of why there is a lack of diversity. I've got a much better understanding of why there is a lack of diversity.
Excellent.
And it's not even as it's complex, right? It's complex, to sort of we gravitate to that which we know. We gravitate to people who are like us. There are all sorts of structural reasons, as well as bias and all of those sorts of things, all kind of wrapped into one that sometimes just combine to create this unbalanced, unlevel playing field. But I absolutely love what you're doing at the Angel.
Thank you.
Any tips for anybody that's thinking of finding out more about angel investing or becoming an angel investor? Any tips for them before we go?
Absolutely. First is start from where you are. Right? We all started from humble beginnings, and it doesn't start with investing in the company, it starts with investing in yourself. So I'm a big firm believer of personal development and being lifelong learners, and the best ways to learn is to work with startups, work in a startup, mentor startups, be around the ecosystem, get to know where your sweet spot is in terms of how you add value and how you can be helpful. Right? Because that's what people ultimately want. They don't want angel investors. They want people that are helpful and can support them along their journey.
Yeah. Amazing. Andy, it's been fantastic. And I feel as though there's got to be a part 2 coming. There's got to be.
We have to.
It's
I'd love to do a part 2 and talk more about the future of angel investing, like what I would do if I was starting a company that wanted to get funded, all of that, those kind of nuggets, my views on technology, AI. So let's make sure we do that.
We must do that. AI in particular, the tech and AI and how it's affecting, new startups and all of that. We're going to do it.
Absolutely. Threat and opportunity.
Thank you so much. Everybody that's tuned in, thank you for listening. I'll be back soon. Have a great weekend and go with grace.
Excellent. Thank you all.